Hi guys, this is Nat.
And this is Gavin, and we are from M8.
As you guys know, fixed home loan interest rates have gone up twice in less than 2 months and are now up to 4.5% as of January 2023. So many of you homeowners who have cash on hand might be wondering if it's a good idea to pay up your housing loan fully.
And that's what we'll be sharing with you guys today. Many of you out there may think that it's a great idea to avoid paying this increased interest to the banks, which may be quite substantial, especially in the case of larger loan quantums.
While it definitely makes sense to pay off your existing loans for peace of mind, it can be dangerous, especially if you lack savings after paying off the loan. In emergency situations such as retrenchment or sudden high medical expenses, wanting to cash out your loan repayment may not be that simple.
This can actually result in you having to downgrade your flat, renting out individual rooms, or even resorting to personal loans for cash flow. These loans are not cheap and they can go as high as 9 or even 10%, so proper financial planning is always important.
Yup. However, for private property owners who are in this situation, you actually have another option available to you. This is known as cash out refinancing or a home equity loan. This is a lesser known option where the bank uses the home as collateral. Through this, you can get up to 80% of your property valuation at a much lower interest rate. There are actually many users of this loan, which we may go over in a later video.
But for now, if you are financially savvy or able to trade and invest, you realize that instead of using your cash to repay for the loan, if you are able to get returns above the current 4.5% per annum, then that will be a better option for you.
Yes, and if you do have the cash on hand, you can actually prioritize higher interest debts first, such as credit card loans, to avoid paying even more interest.
Another reason why some homeowners pay off their loans is the fear of saddling their family members with outstanding loan in the event they pass on. However, this should be the least of your concern as your mortgage loan can be insured.
Yup, and for HDB owners, you should have already paid for a mandatory mortgage insurance, also known as the Home Protection Scheme.
If you are a private property owner, you can purchase the Mortgage Reducing Term Assurance, also known as the MRTA. So whether you are a HDB or private owner, the HPS and the MRTA will pay off your outstanding loan in the event of death or permanent disability.
Yup, so if you still think paying off your mortgage is the best for you and your family, then be sure to read the terms and conditions of your home loan with care, as some loans do impose a prepayment penalty which should be factored in as well as one of the considerations.
Yes, however, this penalty is usually only in the early stages at around the 3 to 5 years mark and will be around 1.5% of the outstanding loan amount. So it will be advisable to wait for this period to end before paying off the remaining loan.
Okay, so now here are some reasons why you might actually want to repay your loan.
Firstly, if you are looking to purchase another property, as your mortgage loan affects your maximum loan quantum or the subsequent property purchases from 75% to 45% for the second property. This means that you will need to fork out the balance 55% in cash or CPF for the second property purchase.
While there might not be much of a difference, as you can use the funds that were supposed to pay off the first property, but do note that the minimum cash down payment will be 25%, which is quite a large portion when comparing to 5% cash when the LTV is at 75%.
Secondly, it's of course due to the high interest rates, which is what we are seeing currently. But like what we mentioned earlier, if you have better use of the funds and you can get yourself a higher return, we will recommend that you do so this way because it allows better flexibility and more liquidity.
Definitely. Lastly is for a better credit score. If you're looking to secure working capital loans for your business, paying off your home loan will grant you a better credit rating.
So in summary, home buyers need a good understanding of their situation, life plans, cash flows, assets and liabilities, and openness to risk before choosing home loan packages.
And remember guys, cash is king. Right, so that's it for this month's property tips. If you guys found it useful, do give us a like, subscribe to the channel and share this video with a friend.
This is M8 and we'll catch you in the next video.
Yeah!